morning, Opteck traders. This is Senior Market Analyst Don Kingsley coming to you live here from Opteck's headquarters on August 12th, 2014, giving you today's Daily Market Review, DMR. So let's get right into it. So we have a number of things that we're going to talk about. We're going to talk about gold. We're going to talk about markets. We're going to talk about threats to economies. We're going to talk about where economies are going, what are good markets to invest in, long run, short term. We'll try and cover as much as we can in as little time that we have. So first, let's check out Forex Factory that I have pulled up here. As you can see, we have a number of announcements the following week. This week. Today we have only two major announcements. I only filtered out all the high-impact announcements because those are the ones that are worthwhile trading. So take a look here. We have the German sentiment announcement coming out around 5 a.m. Forecasted to be 18.2, which is rather low. And overall, it's been not very positive, unfortunately. This announcement is the level of diffusion index surveyed on German institutional investors and analysts on the overall economic sentiment. As you can see, Germany has been underscoring their forecasts since the beginning of March. So what can we expect? We probably can expect a similar announcement, perhaps not quite meeting expectations, but it's interesting how low it's significantly dropped since the beginning of this year. You can see that here as I open up the graph. Also, we have preliminary GDP announcement quarterly from Bank of Japan. Of course, this is the adjusted inflation value of all goods and services produced by Japan. You can see in terms of performance, it's been doing rather well, better than expected. So perhaps we can trade on our assets for Japanese yen to go up, given that we have a forecast that's positive, of course. Their forecast is even to be negative, so it's quite interesting to see what will happen later on this evening. As we move down the week, as you can see, there are many announcements tomorrow on the British pound, mostly related to growth and unemployment. Unemployment from previous was 6.5%, which is good for British pound. Expected forecast to be 6.4%. We can see unemployment has dropped significantly this year, and it's had an interesting climb since the subprime loan crisis that occurred in the United States around 2008-2009. It's the lowest it's been since, appears to be April 2009 at least, since the unemployment was this low. So if we see anything positive today, we're taking British pound upstairs. Hopefully, especially if it's part of the major pairing, like GBP USD, GBP JPY. Although, because there's an announcement on the Japanese yen today, it might be good to hold off until trading on British pound Japanese yen until tomorrow once these employment announcements come out, as well as Governor Carney from the Bank of England will be speaking early that morning, coming here from European time. Also, tomorrow evening, core retail sales from U.S. dollar, so U.S. dollar will be interesting assets to trade on as well. Later on this week, we're going to see preliminary consumer sentiment of the U.S. economy. Previously expected, or at least previous outcome was 81.8. It's been having an interesting month, and previous history as well for the past couple months this year.
So as far as gold is concerned, gold we're actually expecting to take high in the long term and lowball it for the short term. At the moment, we're looking at a lot of volume coming from China. However, weakened demand in China has resulted in gold taking a drop. You can actually find out more about what's going on with gold by going here to fundamentals, pressure pushing down on gold. In this interview, they talk a lot about where gold is going and what to expect and what values. And they describe that gold is expected to maintain at about 1310 and drop to as low as 1250 in the next few months ahead. So I would definitely take a look at that when you have more time on your own.
All right, so that's a tidbit on where gold is going. So in the short term, gold we're going to take down. But over the long term, in the next couple months, like they said here on Bloomberg, gold could go up. So keep your nose to the grindstone here on gold. Some other things I want to go over. Recently, Bloomberg took a poll from its readers and constituents on a number of things. So we're going to talk about that. One, good markets to invest. So let's talk about bubbles. Right now, what bubbles are forming, what are good markets to invest in at the moment right now? Internet and social networking stocks are increasing, and if you have a Facebook, you probably can understand why it's very, very popular to be involved in social networking stocks. They not only are very, very good in terms of high volatility in the beginning, but they can sometimes take off, which is amazing. Bitcoin has been taking over as a bubble already. 55% here polled believe bubble for Bitcoin is already formed, and it's capping investors as far as Bitcoin's related. Not yet on the verge. U.S. housing markets, as well as U.S. treasuries and junk bonds, and bubble definitely not forming at the moment for U.S. health markets and U.S. stocks. What are the best and worst opportunities as far as next year? United States definitely up by 38% of those polled, followed by UK at 13% and the Euro at 23%. The BRICS kind of fall right after that: Japan, Brazil, Russia, India, and China. And the worst at the moment for next year, Russia takes the cake as far as 40% polled believe Russia is definitely not a great place to invest. I would tend to agree because of all the EU sanctions that have been just placed on a lot of Russian banks, as well as individuals in Russian government as well. Now, here are some things about markets. Markets of Bloomberg poll: S&P 500 up, Treasury notes up in terms of 10-year notes. Oil is mixed bag. Most people see oil going up. However, there's at least another third or two believing oil is going to be going down or also staying in place. As far as economies, polled: U.S. up, Euro down, Japanese up. And the BRICS also split in a number of ways. 20% believe BRICS are going to continue to improve, 36% say it's going to deteriorate, and 35% believe it will stay the same. What are the biggest threats right now to world economies? In the U.S., it's inflation, making sure the value of the dollar remains constant and keeps up with GDP. Euro is afraid of deflation, the value of the dollar just dropping. The value of euro. And Japan as well fears deflation. So those are some of the interesting things that are going on in the world. As far as taking an example, let's talk about Iron Dome. Iron Dome has been actually positive for world market economies because of the investing that has gone into it. U.S. recently signed emergency spending for Israel on Iron Dome at $225 million, and President Barack Obama signed it into law about 3 days ago. So there's a lot of inflow in terms of funding for technologies in terms of military capability, but that is also useful in the private sector as it will disseminate into startups. Multiple startups using e-commerce tools, as well as combining live imagery and smartphone and iPad mobile devices. When Israel is at war, in constant state of war, which it has been for the past 60 years, it tends to be creative and innovative in times when it's least expected. So right now, currently, they're engaged in a prolonged military conflict in Gaza Strip, in which they put Iron Dome to the test, and so far it's been passing with flying colors. So we're expecting probably more funding to head towards Israel's shores in the near future, as well as their R&D to expand as a result of this. So that's the daily market review from Don Kingsley. Go ahead and get back to trading, folks. Looking forward to the next one. Take care. Signing off for now.